spent a month in Egypt this year. I go there every year. I live part of the year in Egypt. And that, they're currently dealing with 28% inflation. And they have natural gas shortages and therefore rotating power outages for part of each day. Different neighborhoods have different times for when their power is going to be out. And that sounds like a terrible scenario, and it is. But I mean, at the end of the day, people are still bringing their kids to childcare. There's still, it's not like anarchy. There's no Mad Max going on. When you see emerging markets go through kind of currency collapse and dollarization, Argentina, for example, at least so far, it's not been a violent, transition. It's not been a revolution. It's been kind of this political revolution that we're seeing in kind of slow motion. We'll see, obviously there's a lot to be written about that story in the future. We don't know how that's going to go. But I do think that basically, even though those who run a country's currency never really want to willingly give it up, sometimes it becomes so untenable, and then that kind of spirals into chaos where no one really knows how to defend it. It's not really working. There's multiple attempts tried to regain it, and there might not even be any sort of violent thing. It's just that it's slow. The better external currency kind of just keeps inserting itself in there, and eventually, politics shift around that new reality. And so that can happen on a global stage with some of the bigger currencies as well. It's just obviously the stakes are way higher when the countries have nukes and when, these big powers are in opposition. So there are positive or at least, they're still friction filled. They're still hard. It's like developed markets with emerging market characteristics. And the question is, can we thread that needle in a way that doesn't lead to some of the darker outcomes of fascism and these rising things that can happen when you have that really destabilizing moment.
The US economy stands on the precipice of a financial storm, driven by skyrocketing national debt and twin deficits that outpace any other major currency. This brewing instability threatens to undermine the dollar's global dominance, raising alarms about the future of international trade and financial stability. Lyn Alden warns of an impending economic disaster that could unravel the very fabric of democracy. Picture a scenario where the dollar collapses, sparking chaos and unrest reminiscent of Argentina's currency crisis. As the fiscal spiral tightens its grip, alternative currencies like Bitcoin and dollar stablecoins are waiting in the wings, ready to challenge the dollar's supremacy. This shift could alter global power dynamics, leading to a destabilizing transition with potentially severe consequences. The stakes are high, with the specter of fascism and totalitarian regimes looming as countries struggle to adapt. Can we navigate this crisis without falling into an era of darkness and chaos? Discover the shocking truth behind this economic time bomb and its profound implications for the US and global economies.
One is making this new system better. So everyone finding ways to make it more decentralized, make the user experience better, educating people around it. All of that work is going into building up this new system, all the network effects, all the technological foundations, all the options. That's one path. And then the other path is basically that, as we just described, the incumbent system is on a spiral, a fiscal spiral. So part of it is just watching that system destabilize itself. If the dollar system is working reasonably well, then any sort of alternative system is going to have likely slower adoption. There's a reason why, central banks were not really accumulating gold for many decades. They were just holding treasuries because treasuries held their value against oil and held their value against other things. They had positive real rates for a while. And so all these countries are willing to hold treasuries. But as soon as treasuries are clearly untenable, both because they can be frozen and because they can't structurally maintain positive real rates on a sustained basis because of the debt load and the fiscal spiral, central banks, start reevaluating gold again. And so part of it is that the incumbent system is itself destabilizing itself. And one analogy I like to use is like in emerging markets, when they have a currency failure, they normally dollarize, either formally or informally. So basically every there's 160 currencies in the world. They maintain some degree of capital controls around themselves that makes it kind of harder to bring in or out value in large amounts. And when they start to become destabilized, the dollar's always there as kind of a pressure, as a better currency than what they have to offer. And stable coins potentially allow that to pierce in even more. It goes around those choke points around the border, and allows dollars to extend even more into those jurisdictions. But at the same time, what's happening is that as the dollar itself in the longer arc of time gets destabilized in a similar way that emerging market currencies get stabilized, Bitcoin is this thing that's there, always kind of pressuring, always there, always an option. And so I think part of it is that the current system just kind of works its way through its life cycle. And the other thing is that people have to make sure that the new system is ready for when some of that stuff really does start to hit the fan. Well, any sort of transition is a heightened period of danger. It's creative destruction. It's an opportunity, but it's also dangerous when you're going through that kind of like middle period. I spent a month in Egypt this year. I go there every year. I live part of the year in Egypt, and that they're currently dealing with 28% inflation. And they have natural gas shortages and therefore rotating power outages for part of each day. Different neighborhoods have different times for when their power is going to be out. And that sounds like a terrible scenario, and it is. But I mean, at the end of the day, people are still bringing their kids to childcare. There's still, it's not like anarchy. There's no Mad Max going on. When you see emerging markets go through kind of currency collapse and dollarization, Argentina, for example, at least so far, it's not been a violent, transition. It's not been a revolution. It's been kind of this political revolution that we're seeing in kind of slow motion. We'll see, obviously there's a lot to be written about that story in the future. We don't know how that's going to go. But I do think that basically, even though those who run a country's currency never really want to willingly give it up, sometimes it becomes so untenable, and then that kind of spirals into chaos where no one really knows how to defend it. It's not really working. There's multiple attempts tried to regain it, and there might not even be any sort of violent thing. It's just that it's slow. The better external currency kind of just keeps inserting itself in there, and eventually, politics shift around that new reality. And so that can happen on a global stage with some of the bigger currencies as well. It's just obviously the stakes are way higher when the countries have nukes and when, these big powers are in opposition. So there are positive or at least, they're still friction filled. They're still hard. It's like developed markets with emerging market characteristics. And the question is, can we thread that needle in a way that doesn't lead to some of the darker outcomes of fascism and these rising things that can happen when you have that really destabilizing moment? Well, challenge is that so the United States has structural trade deficits, and so in some scenarios, other countries can actually benefit from a weaker dollar. If a country, for example, owns a lot of assets, reserve assets, gold, and global equities and things like that, and then they have dollar-denominated debts. If the dollar encounters a spiral of, the fact that it has larger twin deficits than almost any other major currency. So on one hand, the dollar is like both the cleanest dirty sheet in the hamper and the dirtiest dirty sheet in the hamper, because looking purely at its twin deficits and all this, on those fundamentals, it's one of the worst. But the other side of that is that because it's the global reserve currency, because of that global dollar-denominated debt, there's all this structural network effect inbuilt demand for that currency. And so that's the polarity of the dollar. It's both extremes, best and worst, at least among developed ones. And so if something pulls out one of those, legs of the stool, if there's less global demand for it, then the other side is actually in some ways worse than other countries. And so I don't really necessarily view the dollar as last, but certainly one of the last, in the sense that the 160 currencies in the world, most of them are untenable. They're small, they're local, they're either pegged to a major currency or they keep devaluing very rapidly. And things like Bitcoin and dollar stablecoins can inject into all of those and replace them. And when the dollar's time is finally here to be kind of truly unstable, everybody's always expecting dollar collapse around the corner, which is just not how this works. The network effect is massive. The supply growth is nowhere near collapse territory. This is a long train. But as that time eventually comes where it becomes truly unstable, It depends what the alternatives look like at that point. By that point, you probably have pretty significant bilateral trade in other currencies, around the Eastern Bloc, for example. And hopefully, then you probably have a much bigger and more widely dispersed and liquid Bitcoin network as well. So when that does come, I think the alternatives will likely be much larger and more normal to like more normalized than they are right now. All of those have trouble because of the network effect, right? So none of them it's not just the currency, it's also the capital market. So the reason why the dollar works is because it's super liquid. Most currency trading happens with the dollar. It's on like 90% of every side of a trade. So if you want to exchange currency X into currency Y, you normally go X to dollar and dollar to Y. And in addition, the liquid market for it, so stocks and bonds in the US, are very broad and unified and deep capital markets. And so you can move hundreds of billions or trillions of dollars over longer term pretty readily. Whereas if you're a country that's trying to internationalize your currency, but you don't have those types of capital markets, like Europe, for example, they've got this shared currency, but then they've got different smaller capital markets. So they're not deep and liquid enough. China, their capital market, partially because of capital controls, partially because of different rule of law, like less rule of law. Their liquid capital markets are just less attractive for many investors. Kind of where their priorities are as a country are less focused on the stock market. And so all these countries are trying to set up bilateral trade, but the problem is they have trouble kind of netting imbalances. I think over time we're going to see more and more bilateral trade, more and more kind of shift toward China, where China can kind of bridge the gap between Russia and some of the other BRICS countries, and they can build enough bilateral trade and settlement and things like that to be a pretty workable alternative to the dollar. And around over time, that diminishes demand for the dollar as we go through our fiscal spiral. But we also see, for example, there are downsides of being the global reserve currency. It artificially boosts your import power. It artificially suppresses your export competitiveness because you're stuck in the position of exporting dollars for the rest of the world, and it manifests through a trade deficit. And so we would go through that painful process, but we'd have a chance for a more vibrant domestic economy. I think the biggest challenge is if you kind of let that happen to you, and so you're kind of forced to go through that from a position of weakness. That's very unpleasant. If you try to get ahead of it and go through that from a position of strength, then you have more options. But we'll see how that turns out. One thing that's interesting is that Trump's VP pick is one of the few politicians that have talked about dollar Dutch disease or resource disease, basically this problem of examining some of the downsides of being the global reserve currency. So discussions that were kind of on the fringes some years ago are now openly talked about in the Senate, held by some major politicians. So we'll see what happens in the years ahead.